Hello students, welcome back to another class of business studies. I'm Neeta Bichu. In our today's class, we're going to study another form of business organization that is a very important form of business organization, that is joint stock company. So we'll study the meaning of joint stock company. We have already studied the definition in the initial chapters. So that is why now we're going to study the meaning of joint stock company. So, joint stock company is a company that can be described as an artificial person having a legal entity, perpetual succession, and a common seal. The company form of organization is governed by the Companies Act of 2013. So, 2013 is one act which was passed for the Companies Act, which rules and regulates and governs the joint stock company of India. Initially, it was the Companies Act of 1956. The act is renewed, and one more act is passed in the year 2013, and this is what governs and rules and regulates and lists down all the rules and regulations that should be followed by a joint stock company. So, this is a joint stock company. It is described as an artificial person because it is created by law. It cannot breathe or eat like human being, but it is an artificial person created by law, having a legal entity. Perpetual succession means long life, continuous life and existence, and a common seal which every company should have, or it can be optional, which shows the logo, which shows the symbol of the company, is what is common seal. And the company form of organization is governed by the Companies Act of 2013. So now we'll study the features or characteristics or nature of joint stock company one by one. So the first characteristic is artificial person. Second one is separate legal entity. The third one is formation. The fourth one is perpetual succession. The fifth one is control. The sixth one is liability. The seventh one is common seal, and the eighth one is risk bearing. So these are the 8 important features or characteristics of joint stock company. We'll study this one by one. The first one is artificial person. A company is an artificial person created by law, separate from its members. A company can own a property, borrow money, enter into contracts, etc. in its own name. So it's an artificial person. It is created by law and it is totally independent from its members, separate from its members. So it can, just like human beings, like natural people, a company can own a property, sell the property, or it can borrow money, it can lend money, it can enter into any sort of contracts. But only thing, it is not a natural person. It cannot breathe, eat, talk, and so on. So therefore it is called as an artificial person which is created by law, not a natural person, because just like human beings, it can enter into contract in its own name. The next one is the separate legal entity. So the next feature is separate legal entity here of joint stock company. From the incorporation of a company, the company has separate legal identity distinct from its members. The law does not recognize the business and the owners to be one and the same. So here separate legal entity means it's totally considered separate. The members are separate and the company is considered totally separate after its incorporation. So once the certificate of incorporation is issued to the company, it can start its business operation. And this, after the incorporation is done, a company acquires an identity. Okay, it is just separate from its members, and that is why its assets and liabilities are totally separate from those of the owners of the company, and the law will not consider the business and the owners or the members to be one and the same. So this is what is separate legal entity. Next one, we have formation. The formation of the company is very time consuming, expensive and complicated process. It has to fulfill many legal formalities and it involves preparation of many legal documents before starting the business operations. So incorporation of the company is compulsory under the Companies Act of 2013. So here what happens is formation is a very complicated, very hectic and very lengthy and very expensive process, because it has to fulfill a number of legal formalities. It has to prepare a number of documents before it starts the business operation. It has to prepare so many documents, and paperwork is too much here in order to get and acquire the incorporation certificate. And moreover, incorporation of company is compulsory under the Companies Act of 2013. So this is what happens here. So your formation is little difficult, complicated process, time consuming, as well as very expensive process. It has so many legal formalities to be fulfilled. So formation is very difficult, and that is one of the important feature of joint stock company. Next one, we have perpetual succession. A company is created by law, and therefore it can be brought to an end only by law. So members may come, members may go, but the company continues to exist, and thus a joint stock company has a continuous life. So perpetual succession means it goes on and on forever. It has a long life, continuous life, irrespective of the members. They may come, they may go, they may join, whatsoever may happen to the members or the owners. The company goes on forever. It has a continuous existence, and that is why it is called as perpetual succession. So when you have company that is created by law, it should be ending also, closing also by law only. It cannot follow any other method of closing down. So law itself should give orders to wind up the company. So this is what is perpetual succession. It has a long and continuous life and existence. Next one is control. The management and control of the company is undertaken by the board of directors. The directors are accountable to the shareholders of the company. However, the shareholders do not have right to involve or interfere in the day-to-day activities of the company. Yeah, the control and management is wholly, you can say, of the company is undertaken by the board of directors, and these board of directors will appoint the top management officials for running the business. So the directors hold a position, they hold a very important position, and they are accountable, they are answerable to the shareholders of the company about the working and whatever is happening in the company. They are obliged to inform to the shareholders, but however shareholders have no right to interfere in the day-to-day activities of the company. So the control and management is whole and sole on the board of directors of the company. Next one is liability. The liability of the members is limited to the extent of capital contributed by them in a company. Only the assets of the company is used to pay the debts, and the personal assets of the members are not used for the payment of debts. So liability of the members is always limited. It means that the personal property of the members is not attached to the business for the payment of debt. So only to what extent they have contributed as capital, or to what extent they have bought the shares, only that much they have to pay, and not more, not less. So their personal property of the members is not attached to the business. It's not sold out for the payment of debt. So liability of the members of a joint stock company is limited. Next one is common seal. So a company may or may not have a common seal. If the company has a common seal, then it has to be affixed to all the important documents of the company, and if the company does not have a common seal, then the person signing the document should be authorized by the board. So common seal is one logo. It's a seal wherein you can find the common sign or a symbol of any company, which will be seen and visible in every important paper or document of a particular company. So but it is optional whether a company should have it or not. The company can have a common seal, or it can also not have a common seal. In case it has a common seal, that common seal should be affixed. It should be there in every important paper and document. And in case there is no common seal, the company has to see to it that the person who is signing all the important documents should be authorized by the board resolutions. So this is what is common seal. It's a symbol, it's a logo, it's a sign that gives the identity of the company. Last feature or characteristic or nature of joint stock company is risk bearing. The risk of loss of the company is borne by all the shareholders. In case of financial loss, all the shareholders in a company have to contribute to the extent of shares held by them. So it is totally spread. The risk of loss, it is spread over large number of shareholders. So the risk of loss in any company is borne by all the shareholders. Okay, it's not like a proprietorship business, it's not like a partnership business where only some people have to share the loss. But here, if in case there is any loss financially, all the shareholders of the company have to contribute, but they need not go for their personal asset, but they have to contribute to the extent of shares held by them and to the extent of the capital contributed by them in the company. So the risk is borne by all the shareholders, so burden is less. So this is all for today's class, dear students. I hope you have understood. In our next class, we are going to study about the merits and demerits of joint stock company. Thank you.